and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. The Nifty climbing the 10,000 mark, markets at historic highs. 2017 has turned out to be a wonderfully rewarding year for equities so far. A hallmark of this bull run is the big participation that we've seen from retail investors, people like you and me who have learned about the power of investing via mutual funds. So as the market remains at record levels, the question is, how do you pick the right fund to invest in? How do you know that your fund will make you money? Do you simply go by past performance, or is there perhaps a more efficient way to pick the best mutual funds? Well, that is exactly what we are focusing on the show this week, and my guest today is Ashish Malik, Executive Vice President and Head of Private Wealth Investment Advisory at Motilal Oswal Wealth Management. Ashish, welcome to the show. Thank you so much for joining in. I know you guys have been doing some very interesting analysis and research into knowing, which funds really work for your clients. But before we get to that, Nifty 10,000, this market has had this record run. Do you feel comfortable, or do you feel now it's getting more difficult to advise clients as far as equity investing goes?
Yeah, so like you rightly said, who would have thought, we would have hit 10,000 this year, the way we started the year. And this time it's, the difference is that it's being led by domestic investors. See, typically what happens is most market tops or, euphorias are also preceded by earnings tops. But this time around, we've not seen an earnings recovery. So that believes me to think that, we are still in the mid-cycle in terms of the rally. So I'm still comfortable because I think the best still lies ahead of us.
So that means that one can obviously go on looking at further equity exposure as well, even at current levels. That brings us to the topic of today's discussion. How do you evaluate mutual funds as a route? And I know you've been doing some analysis, which seems to be putting the focus not so much on how well the fund has done in the past, but who the person who is actually managing that fund.
Right. So, before we dig into it, let me give you a little bit of a genesis of this research. I've been in the industry now for about 21, 22 years, and I've worked for a couple of asset management companies. And I have always thought that there should be a better way of investing your money or picking funds than just looking at the past returns. So some of the research that we did gave us some, amazing findings. So one of the findings was that only 30% of the funds which are quartile 1 today remain quartile 1 in the next 3 to 5 years. So which means that if you're looking at past returns and then investing your money, chances are that you could be disappointed into the future.
Okay. So then tell us, what is your approach to fund selection now? And I know you're looking at betting on good managers. What's the definition of a good manager? Right.
So this study then led us to understand as to what is a better way of picking funds. So what we did was, we looked at the 18-year history of mutual funds. So when we started in 99, there were hardly 21 equity funds. And by the time we finished our study, there were more than 350 funds. What we did was we stacked up every single mutual fund's performance on a year-on-year basis, and we ranked them among quartile 1 to quartile 4. And we figured that there are few fund managers or funds which continue to remain between quartile 1 and quartile 3. So the funds which consistently remained in quartile 2, quartile 3 or quartile 1 eventually became quartile 1 over a longer period of time. In the near term, that is 3 to 5 years, the quartiles can change quite dramatically. But then when you look at the 18-year performance, you get some sort of a pattern, and you figure that there are some fund managers who consistently tend to remain in quartile 2, quartile 1, and that led us to then meeting these fund managers and trying to understand how you should be investing in funds.
So what is it that these fund managers are doing differently, or what are the parameters which are perhaps setting them apart? And then are they really your star fund managers as per this survey?
We figured that the people who eventually deliver consistent performance in the long run are people who have a clear style or clear philosophy of managing money, which means that they're not trying to chase the market. So they have a particular style of investing, and there are times when their style doesn't work. So let me give you an example. Even some of the best performing funds, a fund which has been in existence for 20 years, it has underperformed the Nifty 30% of the time. Now, typically when you underperform, if you get disturbed and you try to change your style, what happens is that, you continue to underperform because you're then chasing momentum or you're chasing performance. But the fund managers who eventually deliver good performance are the people who stick to a particular style.
Interesting. So what does the study say? What are the most important parameters to come to this conclusion of, let's say, who are the best 5 or the top 10 managers that the study threw up?
Right. So there are 4 parameters that we figured are very, very important. And this is what led us to the 4C framework. One is the clarity of style or philosophy. Does the fund manager have a well-defined style of investing or managing money? And does he stick to that style over different periods of the market? Right. Second is, what are the capabilities of the fund house? What is the research capability, or what is the advantage that the fund house has from an analysis or a data interpretation perspective? Third is, consistency of performance. Is the fund manager looking at consistency of performance, or is he trying to chase performance? And lastly, but not the least, it always helps to have a fund manager who's gone through different cycles of the market.
Sure.
So class or experience of the manager also matters eventually.
Okay, very interesting. So who are the winners?
So there were several winners, but we finally, whittled it down to 24 names. And these are managers who manage funds as well as, PMS portfolios. But, for the benefit of your audience, we'll talk about mutual fund managers.
Okay.
So one of the most consistent fund houses has been Templeton. So, Anand Radhakrishnan, Janaki Raman, Roshi Jain, these 3 have shown up consistently in our study. The other fund house which has also shown up very consistently is ICICI. Whether it is Naren or whether it is Mrinal Singh, I mean, their funds have done consistently well. The other fund house is Kotak, so Harsha and Mahesh in Birla. And recently, the Motilal Oswal funds have also been doing quite well.
Okay, really interesting. So, well, Ashish, what we actually did was independently, we also caught up with some of these star managers to try and really understand what goes behind their style of investing. So let's do one thing. Let's play out some of these, clips that we've picked up. The first one being Mahesh Patil, who is the co-CIO at Birla Sun Life Asset Management Company.
Hello friends, my name is Mahesh Patil. I am the co-CIO at Birla Sun Life Mutual Fund, overlooking the equity investment portfolio, which is over 65,000 crores. I manage a few funds, namely the Birla Sun Life Frontline Equity Fund, which is now the largest fund in the large cap category, Birla Sun Life Top 100, and Birla Sun Life 95 Fund, which is a balanced fund. You can sum up my investment philosophy as growth at a reasonable price. That's what I believe in. And also, while investing into, I believe in having a blend of a top-down and a bottom-up approach. Taking risk without actually studying the proper environment and taking risk without knowing what you're jumping into can be really fatal. Being humble and also accepting one's mistakes and taking course correction whenever the things go wrong or whenever something goes against one's underlying assumption, I think is an important part of fund management. So one of the investments which we made around 3.5 years back, this was a stock called Bajaj Finance. I think wherever we see a company which can have a very scalable opportunity, has got very good management and a key competitive advantage in a market which is growing, I think then you have a winner at your hand.
Okay, so interesting thoughts there and interesting style. What made him one of the star managers on your list, Ashish?
There are some fund houses who have an overarching philosophy and all the managers manage their funds based on that philosophy. Whereas in Birla Sun Life, what we found was they give the flexibility to each of their managers to have their own independent style. But there is an overarching theme in terms of buying quality companies at reasonable price. So I think the fact that Mahesh has stuck to his style over the last few years has shown up in performance. And that's one of the reasons why we like them as a fund house.
Though he does say that, it's important to also realize when your call is not going right, and it's also important to have that element of flexibility in your approach.
Absolutely. You need to have flexibility, but at the same time, what happens is that, sometimes your style doesn't work. You also need to have conviction to stick to it even when markets are not rewarding their style.
Yeah.
So I have seen this common trait among most successful fund managers, that they don't get perturbed when sometimes, market is not rewarding their style, and they do tend to underperform for brief periods of time.
Okay, well, we have to take a break on that note, but don't go anywhere because we are analyzing several other top fund managers that have been picked by Motilal Oswal Private Wealth. We'll be back in just a moment.